Hello, everyone, and welcome to Fluent Financial's What You Should Know for the week of May 3rd. My name is Mike Lanese, and I'm your portfolio manager at Fluent Financial. Stocks fell broadly on Friday as investors took profits following a flurry of earnings reports, including a blowout quarter from Amazon and another batch of strong economic data. The U.S. economy accelerated in Q1 with GDP recording a 6.4% increase versus a 6.7% estimate, but still very strong numbers. Virus fears caused stocks to finish near session lows on Friday as the U.S. is going to start banning travel from India as India is seeing a big increase in their coronavirus cases. Even with that, stocks are looking to be opening 0.6% higher as of Monday morning. The Dallas Fed President Robert Kaplan said signs of excess risk taking show that it may be time for the Federal Reserve to consider reducing its massive bond purchases. For the week, the S&P eked out a slight gain, while the Dow and the Nasdaq both fell, but all three benchmarks posted sharp gains for the month of April. What's interesting is that the gains all came in the first half of April, with the S&P up 5% through the first 2 weeks, but then it's basically traded sideways since then as stellar earnings numbers have come out. Year to date, the S&P is up 11.32%, while the VNO is up a little bit over 13.07%, and that's our stock portfolio. For the week ahead, we have the second busiest earnings week on slate, with 60% of the S&P earnings reported so far. The Q1 earnings season has seen a record 87% of the S&P companies topping estimates and earnings growth, beating their numbers on average of 46%. Economic reports this week include updates on ISM manufacturing, construction spending, factory spending, and the March jobs report coming in later in the week. For updates on stock income and our options portfolios, the stock income has generated 1.21% in call income from the sale of 55% of our possible calls through the first 2 weeks of a 5-week options session. 5% of these calls are currently in the money. Performance-wise, the portfolio was up 0.65% during these first 2 weeks, while the S&P recorded a negative 0.1% return. Our Advantage portfolio has sold 50% of its possible calls and generated 0.84% in cash flow, and 28% of these contracts are in the money. Performance-wise, the Advantage portfolio is up 2.12%, again versus the S&P's negative 0.1% through those first 2 weeks of the 5-week session. As always, thank you for tuning in to What You Should Know, and have a great week.